Welcome everyone. So under external source of financing, so far we talk about different like bank overdraft, trade payables, venture capital, crowdfunding, share capital, mortgages, leases, and everything. Hire purchase. This different variety of source of finances we discussed so far. So in this session, we are going to mainly going to find out about the mainly the theoretical the question, the possible questions, and the case studies based on this question. Okay, first of all, we'll go to this activity. Activity number 2, you can see the crowdfunding. Crowdfunding has started to grow as a source of business finance in Korea. According to the Financial Service Commission, some 2,300 people have invested in total of KRW 5,740 million in 72 companies through crowdfunding platforms since April 2016. This is up from KRW 1,870 million since the end of the February. So it was actually improvement is there in the crowdfunding website. Even yesterday also I show you in my previous session, you can see that crowdfunding website we talk about like Kickstarter, how they collect the money from using internet platform. And even certain parts of the questions of this crowdfunding topic was, recently they have tested so many times. So define crowdfunding question, even for 9-mark question, the justify options also sometimes crowdfunding is a major option. So and Marino Techno, the small biotechnology firm based in Yeso, South Korea, needs some finance to help fund further product development. The business produces innovative makeup and also made from recycled marine byproducts. However, the company was struggling to get the finance it needed. According to CEO, this was because most of the finance available to business ends up in Seoul or the surrounding Jeonju province. And when the CEO heard about the new crowdfunding site, he thought it might be worth a try. And as a result, the business was successful. It aimed to raise about 80 million, that is around like a similar to 70,000 US dollars. And by the end of the first day, the target was achieved. Within 1 day, target achieved. You can see sometimes the projects within 2 hours, sometimes target achieved. So many people are there, crowd people are waiting to invest in the business. So by the end of this week, a total of 127 million raised through the crowdfunding. That's the main idea. So you can see what is meant by the term crowdfunding, and ask another question. Crowdfunding is an external source of finance. What is meant by this? And discuss why marine techno use crowdfunding to raise finance. That's why sometimes it's not available for you. It is not, sometimes bank loans are not available, sometimes not qualified for a bank loan, but crowdfunding is the best option. So let's go to the marketing scheme and see this case, the crowdfunding websites. First question, what is meant by the term crowdfunding? You can see the answer. Crowdfunding is a relatively new source of finance for a business. It is similar to peer-to-peer funding, right? And then where the banks are excluded from and individuals can lend money via internet to others without previous knowledge of them. However, the fundraisers tend to be business groups who are involved in the particular venture, such as putting on a and you can see a building or school or setting up a community. The lenders or investors will be large numbers of individuals who together represent the crowd. The transactions are conducted online. In this case, the Marine Techno use an online platform, right? Online crowdfunding platform called CrowdNet to raise 127 million. So there are so many crowdfunding platforms are available. As I told you, the crowdfunding websites are available, networks are available, platforms are available. You can see here in my the handout material, I show you some, the crowdfunding website, like materials available, like in my handout, you can see the page number 10. So certain things, different countries. Now we fund Equitynet, Circle Lab, Underscrub, Fundable, Seed Invest, Crowdcube, Investable, OneWest, Kickstart. So many, there every country now this platforms are being creating, and then people can able to raise money for their projects and innovative ideas from this. The second question in this case study was crowdfunding is an external source of finance. What is meant by this? What is meant by this? So external source of finance, mainly giving the answer that is from outside the business always. Internal is coming inside the business. External means coming from outside the business. So business often have to raise money from outside because the business is not able to generate sufficient fund on its own. That's the thing. So internal sources are not enough. Return profits not enough. Sale of assets not enough. Then that's the option that to go crowdfunding. In this case, crowdfunding is an example of an external source, and the lenders or investors will be large numbers of individuals outside the business who collectively represent the crowd. And the next question asking a discuss question, normally you say analyze question, why if marine techno use crowdfunding? So in this case, you can find out some reasons. The marine techno needs some finance to help their new product development. However, the company was struggling to get the finance it needed. And according to the CEO, this was because the most of the finance available to business ends up in Seoul and the surrounding province like Gyeonggi. So when the CEO heard about the new crowdfunding site, CrowdNet, he thought it might be worth a try. That's why. So this business was outside the Seoul, and then you can find out very difficult to find money in that normal source of financing. So they wanted to start something new, the product development of this business. So they started crowdfunding. Within a day, they're able to reach their target. Right? Okay. We'll go to some kind of like a MCQ question based on this. Right. Okay. First MCQ, you can see which of these sources of finance is internal. Return profit, return mortgage, venture capital, crowdfunding. Okay, Deva.
So it's return profit.
Return profit, very good, excellent. So mainly only return profit you can see internal. Other methods are external, mortgage, venture capital, crowdfunding. Okay. Second question. Which of these is a short-term source of finance? Short-term source of finance. Right? Okay. Okay, two participants this time. We have seen the raised hand. Okay, Liara, what's the answer?
So is it D, bank overdraft?
Bank overdraft, external, exactly. The short-term method, bank overdraft is the best. Mortgage, share capital, venture capital is a long-term. So bank overdraft is short-term. Okay, question number 3. Trade payables is a suitable source of finance to fund the purchase of what? Trade payables is suitable for what purchase? Delivery vehicle, inventory, property, direct labor. Okay, Deva, what's your answer?
So is it inventories?
Inventory, correct. Because normally we are using trade payables like, buy now, pay later option, inventories, not the other one. Okay, last MCQ, the right issue involves the sale of what? Right issues involve sale of. Okay, this time. Okay, Rajiv.
No, sir, is it new shares to existing shareholders?
Correct. Answer. Very good. Yes, correct. Excellent. Right issues involve sale of new shares for existing shareholders. Right. That's the correct answer. Okay. Now there are some past questions are there. So I like to go through the 2021 June paper 2. You can see 2021 June paper 2 options. We can see that there's a defined question. The small question. We start with the small question. 2021 June paper 2. This is a question. They're asking, define the term venture capital. This is a question. Define the term venture capital, 1 mark, no need of application. No need to do the case study also. This is just a defined question. Define the term venture capital. Okay, if you know the answer, you can raise the hand. Define the term venture capital. I think yes, students are raising hand. Okay, Deva, what's your answer?
So you already said that like venture capitalists, they provide money for business purposes. So
it's like
that the ones?
Especially, yes, especially startup companies. They're giving,
yes,
taking a risk. They're investing on their new ideas. We'll see the marking schemes answer also for this one. This is 2021 June 2021. So very recent paper 2, the large business question. Marking scheme says the venture capital is. You can see the definition. Venture capital is a type of risk capital available to startup businesses. 1 mark. So venture capital is a type of risk capital available to startup business. If you just say venture capital is money give for the businesses, that's wrong. You have to say specifically for startup businesses. startup business, and it's a risk capital. Why we call risk capital? Because they are taking risk to investing in a new ideas, business idea, because we don't know whether the business idea gonna success or fail. So that's why venture capital is a type of risk capital available to startup businesses, right? So that's a 2021 June recent paper, question number 1C, defined question, right? Okay, there's another question I show you. There's another explain question they're asking. This is June 2021 paper. This question they're asking, the June 2021 paper, explain question. Explain one benefit to a business of using crowdfunding as a source of finance. 3-mark question. So define question is just one sentence, but here explain question, you have to explain it like at least 3 sentences we expect. You have to give the one benefit and you have to explain that benefit. You have to develop the point, right? One benefit of crowdfunding. Is there anyone who can provide the answer? You can raise your hand. Crowdfunding is a new term. That's why yesterday we talked about this thing. Because this is recent paper. This is also 2021 June paper 1, right? Small business paper. Question number 2, part E, asking for a 3-marker question. Explain the benefit of using crowdfunding as a source of finance. Okay, I can see some students. Yes, Anik. Okay, what's the answer?
So it's a quick way to raise finance.
Okay, very good. It's a develop how it become a quick method. Like yeah, we find out that within 2 hours some projects actually being capitalized. Sometime within a day. It's a quick method. That's true. Explain a little bit more.
Sir, because there is no upfront fees and stuff like that, sir. So
Yes.
you can just pitch it to another business.
Yeah. So this. Yeah, correct. And the thing is based on platform. So many people can contribute, like donate with reward or without reward. So look at the marking scheme here. Let's explain one benefit of using crowdfunding. So answer here, crowdfunding can be very fast. This is your answer, same answer, Anik. Crowdfunding can be very fast way to raise finance. Many small investors, right? When no other lender may be available, right? So answers without any explanation, with no explanation, maximum 1 mark. That's why always you have to explain like that. 3 sentences important. You can see here, you can see crowdfunding can be fast way to raise money. It's 1 point, 1 mark. And from many small investors, I told you there are like large numbers of investors are there. Large numbers of many small investors available. Another 1 mark. When no other lenders may be available. So when there's no other options available, other lenders available, crowdfunding give you a very fast method of raising money for the project, because it's give you money from many small investors. That's called crowdfunding. So and say not only this answer, accept any other appropriate response. So you have to always say crowdfunding. What else? We can say crowdfunding. It's a like there's no upfront fee. That's another point Anik actually mentioned. Okay, Deva, any other, you have any idea like what are the other methods?
It reaches a higher customer base, like a lot of small investors from all over the world, like they contribute to the projects, so that's best.
Yeah, and also you can be normally the crowdfunding website, you can reward it, like in return for the idea.
Yes.
You can reward your goods. Yesterday I think we talked about the shoe made out of coffee, right? And the plastic, and that's that one they are giving. If you invest $99, they are giving a pair of shoe. So automatically crowdfunding, that's why it's a method of raising money, and even you can sell also. Sales also can be improved, and it gives some kind of promotion. Like people are go through this, they discover projects from the internet. So this is a very good idea for people. Like you can increase your market share, right, internationally, because they do free shipping in Europe, America, Asia. So it's a very good method to increase their market share as a marketing tool also. Like not only financing, funding will be very fast method, and no interest and no burden here. That's the thing. Another advantage crowdfunding. If you collect the money that you want, you don't need to pay it back, right? No need to repayment. So the only thing that you can pay for this fund by using your own product, you can reward for the investors. That also, if you want on, like, that is always or you can reward from your own goods, that project, if you're successful, you can produce so many items and you can reward the investors from your projects, items that you produce, products, goods and services. Then you don't need to repay. There's another thing, there's no financial strain or burden for the business from this method. You can collect more money sometimes than you expected, right? Like yesterday, like, that the video, we find out that the investor only expect about like 19,000 US dollars, but he got at that time but 1.5 lakhs, right? Almost like, that I don't know how much right now. Sometimes that's why you can even sometimes there are money coming without, like, exceed your expectations. Expectations sometimes can be exceeded. So that's the thing. Organizations, they are using this method very well. So it's a very good method, fast method to increase money, raise the capital, with many involvement of a lot of investors when there is no other option available, right? And in case another point, the method is very flexible, and you don't need to repay the loans and repay the investment back to again for the investors. Then is the money generated. It's not financial, there's no stress, there's no risk, there's stress-free, no burden. So that's a very important, very popular method of funding, right? But unfortunately, some countries we don't have, especially like, Asian countries, these methods are not available because there are so many scammers, so many like fake projects. People are there, they just collect the money and then they just disappear. That's what happened. So a lot of countries, in developed countries, there's a mechanism. There's these websites are responsible to collect the money, and at the end, so they are collecting some percentage for the website. So that's a weakness. That's a disadvantage of crowdfunding. This website, they are keeping kind of a percentage, like 10% of the money collected, they are keeping for the website because they are the one who provide the platform to collect the money. It's like they are acting like a broker. So they demonstrate their product and then they collect the money on for your account, and they are keeping about like a 10% margin out of that, they are commission. So that's a disadvantage. So anything, everything not free of charge. You have to pay some price for everything. So that's the disadvantage side. You have to pay some commission. You should share with the website platform. Okay, that is the crowdfunding and right venture capital question was tested in exam. So I would like to show you right now some June 2021 paper 1. There's another 9-mark question. So this question was basically based on, again, because a big question came from crowdfunding. So you can see this question. In order to start selling shoes to men and children, Backyard Shoez will need additional finance. Owners are considering the following 2 options. Option 1, crowdfunding. Option 2, overdraft. You can see this question that mainly these are both external source of financing. Crowdfunding is a external long term, and overdraft is external short term. And the objective of this business, they want to develop a new product range for the men and children, right? So to collect the additional finance. So now this question, the case study was a Backyard. This is June 2021 question. It's one of the recent paper. Paper 1, Backyard Shoez is a small business in Kenya selling shoes and handbag for especially ladies right now. So they want to improve their market segment. They want to increase their market segment into men's and children's also. So in order to do that, in order to introduce new product range for this market category, more money, right? They need more finance in this case. The owners are considering the following 2 options. First option is crowdfunding, and second option is overdraft. Both options are correct, but when you're writing a 9-mark question, you have to pick one option only, right? Don't compare and contrast. Don't try to do that. Take one option. Let's say option 1, crowdfunding. Then talk about 2 advantages of crowdfunding and 2 disadvantages, limitations of the crowdfunding, right? No definition and no conclusion needed. Just a 9-mark question. You can see the 9-mark space, like just 1 page, right? Just 1 page. This is answer. You can see question number 3. Let's go to some case study material in order if you can get a good idea the application point. This is the case study, the Backyard Shoez. This is 2021 June paper. Backyard Shoez is a retail business located in Nairobi, Kenya, and it sells a wide range of shoes, handbags, and accessories for ladies only. Ladies only. So current market segment only targeting ladies, right? Backyard Shoez has 3 shops in Nairobi. The shop are located in a busy shopping center where there are the shoe shops. So that's a context here. So after that, they're asking the question number 3. This question is specifically selected because it's actually going in line with our topic. You can see this one, another HR question, bonus payment and job enrichment. So the second 9 marker was the based on the financial management, source of financing. So then now they wanted to introduce shoes to men and children also. And for this, they need money, additional finance. They're asking 2 options they're considering right now. First option would be crowdfunding. Second option would be the overdraft. So we'll see what is the marking scheme says. When you're getting one option, you have to pick that option and talk about that 2 good points and 2 limitations only, right? And at the end, even though there is no conclusion, you can recommend that. I choose option 1 because the advantage outweighs the disadvantage, like that. You can recommend. You can say, however, it depends on the amount of money required. For example, sometimes overdraft, there are some limits, but crowdfunding, there is no limit at all. So we have to talk about it. So let's go to the market. This is June 2021. Paper 1, market scheme. You can see crowdfunding. June 2021, market scheme. You can see here. Here we go. So you can see here AO2, application 3 marks, AO3, analysis 3 marks, AO4, evaluation 3 marks. It's basically level-based marking. You can see here, even though it's mentioned level 1, level 2, level 3. In order to reach for 9 out of 9, you have to write a level 3 answer. Level 3 answer means your application must be level 3, analysis must be level 3, evaluation must be level 3, right? Interconnected points, everything. The structure is 2 method, 2 advantages, 2 disadvantages only. I'm repeating again because this should be again and again. You have to practice these kind of questions, right? You can see here option 1. This is no AO1, that is no definition needed, no knowledge parts, because only started AO2. AO2 means application. So AO1 means knowledge. So no need to define anything. You don't need to define what is crowdfunding means or not, what is overdraft mean. No definition needed, right? So you can just start with the option 1. Let's say if you talk about the crowdfunding, crowdfunding is a quick way to raise finance to buy shoes at latest fashion. So the application part is here is a quick way to raise money to buy shoes for the men and children, right? So that's the first application point. To get the analysis point as a result, same option. They could also pay the investors with products rather than the financial reward, which could help cash flow. So you can answer another evaluation point, okay, analysis point. You can see that they could pay, the Backyard Shoe can pay their investors, the crowdfunding small investors, with their products rather than financial reward, which could help their cash flow. You got it? Even yesterday also we talked about the crowdfunding, the Kickstarter with the shoe example. They reward the investors with their product. So here also, they could also pay their investors with their products, right? I think you can better understand this one. You can understand this concept because their investors will be rewarded from the products they sell. So your Backyard Shoes also can provide the pair of shoes for children, pair of shoes of men's and everything, for ladies, handbags, everything you can distribute to the investors based on the amount they're investing. So it's a win-win concept, right? They're getting money, and on the other hand, they're rewarded from the products they are selling. So win-win concept. You can get rid of the stocks also, and you can sell it also, and you can get the money also. So, and also improve your cash flow because you don't need to give them like a dividends or interest, nothing you have to pay in return for that. So returns are going on as a way of sale. So it's a kind of a win-win concept. It's a really good concept. And you can see the option 1 evaluation point, AO4, crowdfunding is this is a however point limitation. Look at the one limitation giving here. Crowdfunding, however, is a high risk way of trying to obtain finance. It's a high risk method because sometimes some projects are there, it's failure. Sometimes people don't like to invest. It takes some days. That's why some projects are like very attractive. We have to provide a very good gig, we call video, to attract the people. But sometimes it's very high risk. There's a two sides. Sometimes it work out, sometimes it's actually not working. Some people are not investing in some projects, poor projects, right? So this could result in Backyard Shoez not being able to raise sufficient funds to buy additional stock required, therefore impacting on his expansion plans. Yeah. You talk about the bad side, the gray area. You can see the other part of the crowdfunding. What happened if fail? What if the business is fail? Because it's a high risk way of investing to obtain money, and this could result Backyard Shoez not being able to raise sufficient funds to obtain the additional stocks required, therefore impacting on its expansion plans. Right? We talk about the overdraft option. We talk about, if you go to option 2, overdraft option, overdraft, you can see an overdraft also Backyard Shoez is an temporary facility to withdraw funds from its bank to buy the required amount of stock. Again, they talk about the stocks of raw material, leather, because they are talking about shoe. So they are giving the application here as a facility. You can withdraw more money from his bank account to buy required stocks. So look at the benefit here. Overdraft, by using the Backyard Shoez, choose an overdraft, will give them flexibility, and they only pay interest when overdrawn. Right? So you have to pay, give them very flexible thing, because you can buy amount as you require, and you can pay also on time, and they only pay interest when overdrawn. But however, when look at the thing, the option 2, disadvantage, evaluation point, the bank can demand repayment at any time, and the interest rate on overdraft are usually high. Right? Bank can demand the repayment they can ask anytime, right? So even the flexible, they're always pushing you to pay as soon as possible, and overdraft sometimes interest rate usually high. Like that, always when you're writing this 9 marker, always use a 2-2 method. Write 2 advantages. You can use a 1 para for that, and the second paragraph we can talk about the 2 disadvantages of the selected one option. Don't talk about the both options, right? So that's the 2021 June paper. So right now we discussed 3 questions. One question to define venture capital, another question explain benefit of crowdfunding, another question about the justification question between crowdfunding and the overdraft. So you can see now in the past paper, these kind of a question are being tested always, right? So you can see the importance of these lessons, right? Normally, like always now, the import, even crowdfunding, venture capital are like a new topics, but in recent past paper, they are checking these topics always. Therefore, it's very important to know their advantages and disadvantages, right? So that's a activity number 2. Also, we discussed with that crowdfunding meaning, and then what is meant by this external source of finance. Discuss why crowdfunding will be suitable for this marine techno company. We discussed that. So whatever the business, whether it's large or small, these business organizations, they can use, both business organizations can use a venture capital and crowdfunding. But basically venture capital, we are talking in the startup situation, but crowdfunding we can actually use for new product development. Even the oil companies, when they go for new product designs and everything, they will ask for the crowdfunding. Okay, now we are moving into chapter review question. In page number 217 in the textbook, you can see the chapter review question. So I invite Samara, can you read the case? Samara, are you there?
Yes, sir. Sorry.
Yeah.
Blakely Motor Scooters make affordable motor scooters in a factory on the outskirts of Bangkok, Thailand. The company is successful and uses a variety of different sources of finance. For example, it makes regular use of a bank overdraft, which provides the business with a great deal of financial flexibility. It also uses another short-term source of finance, trade payables. This source is used to obtain a range of components and other parts from local suppliers. In 2016, the company had ambitious plans to go upmarket. It wanted to launch a more modern and trendy scooter to aim at a growing body of wealthier young consumers in the market. The design process had been completed, and the next stage was to build a production line where the new model would be assembled. However, it needed to raise 700 million to fund the construction of the plant and fit it out with the state-of-the-art technology. Blakely was always keen to use retained profit to help fund new projects. However, this time the most they could use would be 200 million. Therefore, the other 500 million would have to be raised externally. Two options were being considered: issue some new shares to existing shareholders or take out a 25-year mortgage.
Okay, thank you. So you can see this company, they wanted to they make it like a motor scooter, like a scooter bikes, I think very popular in Sri Lanka also. Right. So a lot of people they are using it's a very classic and very what do you call it, comfortable one. There is no actually there's a difference between rich people also sometimes they use scooter bikes, very comfortable. Like and main thing they're asking two question out of this. What is meant by first question was actually what is meant by short-term finance? Anyone who can answer this question? Raise your hand. Short-term finance meaning, right? Okay, first person. Okay, Deva, can say answer. Short-term means?
Yes, so that means money borrowed for less than less than 1 year.
1 year. You can say two methods, less than 1 year or less than 12 months. Both correct.
Sure.
Half is correct. Accepted. Short-term finance. You should know that definition. Second question. Why is retained profit is an internal source of finance? They're asking this question. Retained profit will be always internal source of finance, right? There are three methods: owner's capital, retained profit, and sale of assets. Right. So I'll show you the marking scheme here. Why this is the internal source of financing we are talking, because money coming from the business, this is saved in the business for a long period of time. You can see chapter question. Profit generated by business, some of this returned to the owners and the rest is retained by the business. So retained profit can be used in the future as a source of finance. So it is an internal source because it has been generated inside the business through its trading activities, right? And so that's why I mentioned, if you ask what is internal source of finance, defined like that. So why is internal? Because it's coming through the business from the past profit. You can say some profits are distributed and some profit rest with the business. So that's why it's internal generated capital. Therefore, it's inside the business. Therefore, it's internal. And the question number 3, they're asking from this case study. Question number 3 asking, what is the main reason for using this method? Beckley Motors often use a retained profit to fund their business activity. What is the main reason for using this method? So they are given the answer because it's cheaper. You can say the advantage here. If using this method more popular because the advantage, the main advantage, it is cheaper. You don't need to pay any interest, no burden, no financial strain on the business. That's why, right? And no interest or no administration charges when using the retained profit. So it is a free source of finance. You can add more. However, if profit is retained, it cannot be returned to the owners. That's an opportunity cost of this situation. This may sometimes result in conflict. Sometimes shareholders would not like because they want dividends. So that's the main key return for their investment. If the dividends are not paid and every profit, every single dollar, every single cent they are earning is retained within the business mean, sometimes conflict can create among the shareholders and the business. We have to talk about that as well, because when you're talking like an analyzing question, this question can be asked like analyze why internal source of finance, why retained profit always useful as important. Analyze question, analyze the impact of using retained profit. You can say it is cheaper, no administration, no interest cost, so in a flexible method. However, you can talk about the other side also. However, if profit is needed, retained, it cannot be returned to shareholders, and some shareholders will be disliked, so they will be not investing in the business. They will sometimes divest, they will sell the shares in the market because no dividend gain. Because in companies, there are so many dividend announcements are coming. A lot of companies, but some companies are there, they are not paying any dividends. That's the nature, right? Okay, the next question asking, discuss one advantage and one disadvantage. So this question should be analyzed question, like a similar to 6-mark question in the past paper. Analyze two benefits or analyze two impact. Impact mean advantage or disadvantage, right? Of a trade payable as a source of finance. In this case, you have to talk about the trade payable. That's another external source of financing, right? Trade payable or trade credit involves buying goods and paying them later, perhaps like 60 to 90 days, 2 months, 3 months time is available. So what's the main advantage here? It's a popular method of finance because it is cheap and easy, right? And there is no direct charge for using the trade credit. right? There is no interest you have to pay. However, the disadvantage of trade credit is many suppliers encourage early payments, right? By offering discount. They say, okay, if you settle within 1 week, we'll give you 10% discount. So a business may miss out on a cheaper goods, although the cost of good is often higher if firms buy on credit, and delaying payments can also upset suppliers since they have to wait longer for their money. That's why always when you're reading, students, right, when you're reading any options, talk about advantage and disadvantage, you can actually memorize the two sides always. In my handout, if you go through, you can find out that kind of thing. That's how I design my all handouts. You can see the concept is here, and also we can see the main advantage and disadvantage. If you go to this handout, you can see the crowdfunding is there, and then venture capital is the process is there, and then share capital. You can see issue of share, advantage, disadvantages. This case, higher purchase, advantages, disadvantages, right? And then trade credit, advantages, disadvantages. So you can fill this one alone, right? And then overdraft, advantages, disadvantages. Because anytime this kind of in papers, you can see this kind of concept can be asked for analyze questions, justify questions, right? 9 mark we talk about crowdfunding versus overdraft in 2021 June paper. So like that, you should know at least 2 drawbacks. If you point out the overdraft, you can write that answer if you know 2 points, 2 benefits, 2 limitations. So like that, always I given in this handout. Reduction of working capital, advantage, return profit, advantage, disadvantage, sale of assets, advantage, internal sources, advantage, disadvantage, like that. So everything I have given the full with the definitions here, short term, long term. So go through this handout. You can take a print. I know you have the handout, you have the printout. So go through this handout and everything. If you have anything is unclear, you can ask me. Any doubt or anything, if you can't understand, you can ask from me, right? Okay, you can see the go to fourth question, the big question, the case study. They're asking the last question, the fourth question. Discuss one advantage, one disadvantage, trade. We discuss that one. The fifth question is assess whether Berkeley Motor Scooter should fund new factory through the share capital or mortgage. Make a clear judgment in your evaluation. So there are, I think I would like to convert this question for a justify question, not an evaluation. So they talk about the 2 options, share capital, mortgage, both are external. Share capital, the thing is you don't need to pay any interest. It's no need to repay, large amount can be gathered. But mortgage, not like that. Mortgage is a loan capital, you have to repay with the interest. So you have to understand the 2 concepts and you pick one, right? And this question, we can see the marking scheme here. Answer. Assess whether this question is question number 5. Which method is selection, right? All sources of finance have their advantages and disadvantages. In this case, 2 particular sources are being considered to raise TNB 700 million to equip their new technology, share capital or a mortgage. The mortgage is a long-term source of finance and could be used for the construction of a production line. Look at the application. However, there's evaluation. However, the borrower must use the land or property with security for the loan. So given the like a definition kind of a thing, knowledge part also, because they have to give some collateral for like a security, have to keep with the like a property or a land in order to get the mortgage. Presumably here, the new production line could use as security for the loan. Mortgages are popular because the interest rates are much lower than those on unsecured bank loan. Provided by the bank is happy for the production line to be used as a security. Mortgage may be granted. However, if the business is not able to keep up with the repayment, the lender could repossess the property used as a security. So that's like a leasing option. If you can't repay the loan properly, then they have the right to take the property back to the bank and they can claim their loan and they can settle the loan and they can sell it to someone and they can recover it. Okay, the other thing is share capital option. In another paragraph, they're talking for limited companies, share capital is an important source of external finance. The sale of shares can raise very large amount of money. In this case, it's a very good point, students. Like when you're writing answer, if you want to link the application, the case study, you can write in this case. This is very important 3 words. In this case, And these numbers, TNB 700 million, is a proper application, level 3 application. And it is not an unusual amount. The right issue may be used to raise more share capital. And this is where company gives existing shareholders the right to buy new shares at a discount. The main advantage of selling shares to raise capital is that interest payments are avoided. Interest payments are avoided, no need to pay interest. Clear? However, look at the bad part of the bad side of the share capital. Shareholders will expect to be paid dividends if the business is successful. The main disadvantage of using shares to raise capital is that cost of administration. Yeah, high administration cost is there, like, when you're going share issuance, pay for so many charges for share market, stockbroker firms, and investor bankers. So many processes there, underwriting fees, prospectus, so many things. There are costs of promoting the issue and communicating with the potential buyers, processing application forms, distributing the share, and possibly underwriting fees. They are giving, I think, this is actually a 10 works. You can remember, like the PLC company, we talk about the disadvantage of flotation. This whole process can use a significant proportion of the amount raised. That's why out of 700, definitely about 70 million will be raised. If the business can afford the interest payment, a mortgage may be preferable, because once the new production line is up and running, the existing shareholders will get to keep all the profit generated by the new investment. However, if interest rates are high, the interest payment over 25-year period would eat into profit. It's a good conclusion. And there is also a chance the interest rate could rise to very high levels. Like that, so always, when you're writing this kind of like a 12-mark question, right, always keep using your application, all points, advantages, disadvantages. In 12-marker, you need to have a definition, 2 points, advantages, and 2 disadvantages, and the conclusion, right? This is how we actually mainly talk about this case study. So with that, you can see this external financing, even this chapter will be finally over. So in my next session, I'm going to discuss a new topic. We are going to start the new chapter, the cash flow forecasting. That's also a really important exam pilot area. So we're going to do a little bit of calculations and imports of cash flow forecasting and everything in my next session, guys. Okay. Then with that, I'm winding up my today's session. Then thank you.